Hey everyone, welcome back to Coyote Loot Crate, where I discuss all things gold and silver. This week is the first weekly update on the gold and silver price, recent discussions in the news, and my personal opinions on where things are headed. I will leave links to the sources I use in this video for anyone to read in their own time. I try to use a balanced approach when it comes to source material, so hopefully that is reflected in my videos. Furthermore, I'm not sponsored or endorsed by any of the sources I share or refer to on this channel. So, without further ado, let's fire on. So to kick things off, let's just see how the price of gold has changed over the last week. Beginning on the 28th, which was a Friday, and going into the following week up to the Thursday on the 3rd, we could see that the price of gold in UK pounds only dropped by £10. So it was relatively stable. It was about 0.7%, as it has here. But if we compare that to the US dollar, which was a drop of $26, it was about 1.4%. So, it seems gold was pretty good, pretty stable throughout the week. And as we look further, we can see some of the reasons why gold had said drop. And so looking at silver, we can see again that it stayed relatively stable throughout the last week, with a drop in British pound of only 15 pence, which, is pretty good as well. It's 0.8% of the price from the previous week. It managed to get above the £20 mark on its weekly high, which was pretty good to see. But it fell back down to its usual bracket of £19. And if we look at the US dollar again, it showed similar stability, staying around the $27 mark with a high of $28.50, only dropping over the week by 40 cents, again 1.5%. So yeah, very minimal and still pretty stable. So as we'll see in the next section, we can just look at some of the articles about the last week in terms of gold and silver and what people had to say about it. We'll start by looking at things from a British perspective. Yahoo News reported that between March and April of this year, the inflation had doubled. And the likely claim in prices is due obviously to the fact that the economy is recovering from the pandemic and coming out of lockdown. British Consumer Price Index rose up to 1.5% in April from 0.7% in March, and it's been the highest CPI since March of last year. So mostly it was in fuel and power bills, as obviously global oil prices climbed from the pandemic lows. As transport gets up and running, there'll probably be all your commercial and domestic flights. They'll slowly start opening as countries start to allow travel further afield. However, April's inflation reading is still below the Bank of England's target of 2%. Inflation is due to fall back as COVID dies off, according to the rest of the article, and by the end of the year, the predicted outlook for inflation is about 2.5%. If we actually take a look at Britain over the couple of last centuries, should we say, between 1751 until the present day, Britain has sort of had a steady increase in inflation of 2% every year. And so if we were to measure that, what was worth £1 back in 1751 would be the equivalent of £231.99. The BBC reported that people wanted to spend more because obviously being locked in your house for all that limit for almost over a year, you've got all these savings, and as restrictions are lifted, there's obviously going to be such a huge amount of spending going on. Meanwhile, the US viewpoint has a slightly different outlook. The US inflation has hit its highest since 2008, with the Federal Reserve in no rush to raise interest rates. The Bank of England may still need to increase rates if the US financial market bottlenecks. And this is according to the BBC World News that Biden has released a statement that the annual budget will increase to $6 trillion, which is $2.2 trillion more than Trump's $4.8 trillion figure in his final year. By 2031, the inflation will be 117% of GDP at $8.2 trillion a year. That's surpassing World War II. A recent interview with Ben Shapiro on the Daily Wire, renowned gold bug Peter Schiff commented on and saying that the real economic growth was being substituted for money printing. And looking at the inflationary depression, the US government and the Federal Reserve are robbing the public of purchasing power for the US dollar by spending large amounts and not raising the taxes, and the cost will come. And so you also have this other problem where the general public find the incentive behind the stimulus check much more enticing than returning to work. $1,400 a month for some people is more than what they earn. And so, of course, you're not going to feel like you need to return to work when the money's coming in that will afford you your general monthly needs. But businesses need people, and we have this problem where there is this high demand and very low supply, which can only be more of a problem for inflation because the prices will go up as a consequence of that. And so for this week, it's still very clear to me that it's still a good time to be buying into gold and silver, both equally at this moment. And I think I'll just be putting a slightly more into gold this month, probably about 60-40%. Slowly just using the dollar cost average and buying in my usual amount every month. Looking into next week, I kind of want to see how the drop in the price of gold continues, whether it will go back up, and also just to see whether or not silver is just going to stay in the same trajectory and keep steady, which I have no doubt that it will. There's not really going to be much movement in the next week or so, I believe. And I'm not really worried when I look at both the UK and the US that anything substantial is going to happen. With the UK long term, I'm still not that worried. I think staying around, going up to 2.5% by the end of the year is relatively okay, and that inflation may continue to rise, although I don't think it's going to be in such a state as the US is looking to be. I'd be much more concerned with the price of the dollar, which I want to keep my eye on anyway, because a lot of what other things I like to invest, where it comes to stocks, for example, are US based. But again, that's for another time. So thanks very much for listening to this video, guys, and I hope you enjoyed it. Like and subscribe, and I'll see you next week. Cheers.